Hello market enthusiasts, welcome back to News That Move Markets, weekly edition. This is your weekly deep dive into what drove the Indian markets, why asset classes moved in tandem or diverged, and how global and domestic headlines shaped your portfolio. I am your host Prem and let's get going. Let's start with the macro story, multiple headwinds, fading momentum. This week, the Indian market weathered a perfect storm of global shocks and local uncertainty. The US government dropped fresh tariff concerns targeting India's pharma and IT sectors, major export drivers. This has spooked FIIs and hammered technology and pharma stocks midweek. Global tech negativity escalated after US giant Accenture's sharp drop, leading to IT stocks worldwide feeling the heat. Persistent and heavy foreign institutional investor outflows kept the pressure up. Historical headwind. Markets globally tend to falter after rate cuts. Nifty saw 7 consecutive red candles, 6 with lower closes, a rare streak, dragging the index to its crucial support in the 24,300 to 24,400 range, and well below its 20 and 100-day moving averages. The sense of optimism from earlier in September vanished, replaced by fears of a deeper slide if support cracks. Moving on to weekly technicals. Bleak but not hopeless. Nifty shed 2.65% this week, forming a menacing long red weekly candle, with visible downside gaps, chart structure now vulnerable. The key is if Nifty can hold the 24,300 to 24,400 support zone, breakdown here may invite another leg down. Next for us is global perspective. India lags, gold shines. The S&P 500 closed flat globally, minus 0.31%, but India stood out. Nifty down 3.2%, Nifty 500 down 3.8% in dollar terms. Hang Seng minus 1.6%, Australia minus 1%, Russell 2000 minus 0.6% were also weak. 12-month performance. India is among the only major economies in the red. Germany plus 27%, Hang Seng Nasdaq show strong gains. 5-year view. India's 13 to 15% dollar CAGR matches Nasdaq and S&P 500, suggesting the recent pain is mean reversion after a lengthy outperformance period. Gold, the star asset, up 2.69% this week, it's the 6th consecutive weekly gain. Whenever Nifty equities suffered, INR gold acted as an excellent hedge and store of value. Dollar index, up 0.5%, still range-bound. A weaker USD would be a tailwind for India, but that relief isn't here yet. Looking at sectoral pulse, the big drags and hidden strengths. IT, catastrophic week, down 7.9%, wiping all the post-buyback gains from Infosys, with further pain in global tech stocks. 1-month IT, down 6.6%, 3-month minus 13%, 1-year minus 20%. 5-year CAGR for IT is just 11.4%, among the worst after oil and gas and media. Other pain points. Real estate, minus 6.1%. Capital markets, tourism, defense, pharma, especially after US tariff rumors midweek before some relief. Small caps, minus 4.7%, mid caps, minus 4.2%. Financials, metals, central PSUs, also lost ground, though less than peers. Who's holding up? PSU banks, metals, autos, MNC, commodities showed relative strength in volatility, appearing on top of momentum rankings. Note short-term sectoral momentum swings, active allocation is crucial. Coming back to the news events driving sentiment and flows. US tariffs on pharma and IT. Sudden midweek pronouncements rattled export-heavy sectors, compounded by a weak global IT setup post-Accenture. FII selling. Persistent outflows reflect global risk aversion, policy uncertainty, and India-specific triggers. Global tech shock. Declines in US tech stocks have major spillover to the Indian IT index. Macro trends. The after-effects of global monetary easing rate cuts are not always bullish for risk assets in the short run. Gold's run. High demand for gold ETFs and spot gold as an equity hedge, another sign of risk-off mood. Next up, benchmark and momentum statistics. Small caps. 3-year CAGR nearly 28%, historic average 15 to 16%, explains why a correction consolidation was overdue. Nifty mid-caps, still above long-term averages, but consolidation is the order of the day. Global momentum ranks. Nasdaq, Nikkei Canada and S&P 500 outperforming. India has ranked 14-15th globally for nearly a year. Consolidation post strong run. Wrapping up, why things are down and what next. Record Nifty losing streak, IT sector pain, small cap mid cap reversal, all have roots in external tariffs, global sector shocks from Accenture, US tech decline, FII risk aversion and policy worries, historical mean reversion after multi-year outperformance, defensive rotation into gold, PSU banks and select sectors for stability and yield. So should be fight or flight. For investors, this is a period to respect risk, consider rebalancing, and eye momentum in sectors that are bucking the trend. Remember, in the markets, every correction is born in euphoria, and every opportunity is seeded in fear. Follow the numbers, chase the news, but above all, stay ahead of the herd, with facts not fads. This has been the Weekly Wrap. See you again next week, with sharper stats and smarter stories.